2022 continues to have its challenges for the economy and the stock market, but are we rebounding from an awful start to the year? A March market review in this week's Fastest 4 Minutes in Finance. Hello again, I'm Scott Inman. Well, most equity markets gained ground in March, reversing a trend of 2 straight months of declines. However, taking a look at March performance of major indices and sectors compared to the year-to-date returns shows we still have some work to do. Let's start with the S&P 500. That's the index most people are familiar with. That index, the measure of generally the largest 500 companies in America, was up 3.7% in March, but it's still down 4.6% for the first quarter of 2022. The story is similar for the Dow Jones Industrial, the technology-heavy NASDAQ, and the small-cap Russell 2000, as well as overseas markets measured by the EFA and EM. If you take a look at S&P 500 sectors, there's more of the same. Every sector was up in March except for the financial sector. Only utilities and energy, though, are positive year to date. Adding to the challenges for investors in 2022 is the volatility of the fixed income market, usually counted on to provide a damper in a diversified portfolio. March provided much of the same. Major bond indices are down as much as the stock market. Only commodities have been flyers in this current environment. It is hard to find a safe haven, much less a place for growth in the current economic environment. LPL Research and others call it a wall of worry, meaning there are multiple headwinds driving concerns. The tensions in Eastern Europe, inflation at 40-year highs, along with corresponding moves by the Federal Reserve to raise interest rates, have all contributed to investor pessimism. But what March might have shown us was the pessimism became a little too pessimistic. In other words, investors decided the value was there again, and they took advantage of marked-down equities. That could mean we found the bottom in March. Maybe. Our best indicator of where the market goes from here is still earnings. The overall health of a corporation determines its stock value. And in the U.S., earnings are still strong. Analyst estimates for the S&P 500 index earnings per share over the next 4 quarters are up 1.5%. First quarter earnings will be reported this month, and we'll get a better picture then of that overall corporate health. In the meantime, it's important to keep a long-term perspective. There are always reasons not to invest in the short term, but historically, a long-term investment perspective has paid off. It is also beneficial to have a written financial or retirement plan. Having something to refer back to remind you of why you have invested the way you have and the purpose of staying committed can keep you grounded when human inclination is to abandon ship. And finally, working with a financial advisor can give you insight into how small changes to your portfolio during times like these could provide an advantage. Thanks for listening.